Hey everyone, my name is Jack, and
I'm about to get financially naked with you.
but in all seriousness, this is another episode of my net worth series where every single month on the first of the month I will go over my current net worth and how that has compared to the previous month, see whether or not I've made any progress towards my ultimate goal of reaching $1 million in net worth and $30,000 in passive income to achieve financial independence. So every month I'll show all of my assets and liabilities to show you exactly what changed, what I plan on changing for the future, so that you can actually see me as I attempt to reach these goals, rather than a lot of other channels which will look more retroactively and will talk about how they reach their goals that they're already at. In this case, I'm actually going through that process in real time, and you'll be able to see me as I do that, critique whatever I'm doing, maybe adopt what I'm doing. I'm not a financial advisor, but if you like what I'm doing, you'll be able to see how I'm doing it right now, and you can ask me questions about it as we go through this journey. If that sounds at all interesting to you, definitely be sure to subscribe so you don't miss any updates. I also post a lot of content regularly every single week about personal finance, real estate investing, and all that sort of stuff. So if you like that sort of content, definitely have a look around the channel, and if you like what you see, be sure to subscribe. Now, I actually want to go over a real estate deal that I just pulled out of on a property in Indianapolis. It was a duplex, and I was actually set to close yesterday had we actually gone through with the deal, but obviously I did not, and I'll be going over that. If you don't care about that and you just want to see the numbers, you can go ahead and go to the time that I'll mark on the screen right now, and then I'll actually break down all of those numbers. Of course, if you want to see the numbers in great detail, I'll go through the whole thing in this episode, but if you want to take a look on your own, I actually always include a link to my net worth tracker, which shows you my progress and also my actual net worth breakdown for that particular month. But anyways, I actually made a cash offer on a duplex in Indianapolis just about, probably about 3 weeks ago now, or maybe a little less. I think it was about 2 weeks ago. It was a property in what I'd probably call a C area, not anything flashy. It's an old property. It was from 1925, red flag number one. So I knew there was probably going to be some problems with the property, but the listing looked very promising. Now, the way Indianapolis is going right now, I did not have time to go out and take a look at this property first. That's because I actually live in Chicago. I don't live in Indianapolis. This is an out-of-state deal that I'm trying to do in Indianapolis. It's a much higher cash flow market compared to Chicago, which not only is a shrinking market in a lot of areas. Now, some areas are good, but they're very expensive, those good areas. So you're going to struggle to find a very high cash flowing deal in Chicago. You'll find some deals with great equity upside. That's not what I'm looking for at the moment. I'm looking for cash flow since I want to get some more financial freedom. And while equity is nice, I'd rather get some immediate cash flow so that we have security in covering our actual expenses. Because when it comes to equity, that's not freedom right away. It's very illiquid freedom, if you can call it that. I want liquid freedom first, and then I could focus on building wealth for the long term later on. Anyways, I thought this deal looked pretty good on paper. It was looking at about a 10% cash on cash return once it was all patched up, and I assumed it needed about $10,000 to $15,000 of work. It was an $85,000 duplex, and yes, that is very cheap. It wasn't anything flashy again, and Indianapolis is much more affordable than a lot of these big markets across the country. And it's a very hot market because of that. I was one of, I think, about 3 offers that actually made offers on the property at or near asking price, and the seller actually countered with a price $500 above asking price, which is kind of phenomenal. And I actually ended up taking it because I thought, hey, what's $500? I'll go ahead and take a look at this property and see if the opportunity that I think is here is actually here. And the results are in. No, it was not a very good opportunity. At least it would have been a very expensive one and would have been a lot of risk for very little reward given the amount of rehab that this property was actually going to need. I actually went down to see it with an inspector and also the building maintenance crew that would be with the property management team that I'd have. That is the chief engineer, if you could call him that, of the property manager that I plan on using in Indianapolis actually came out to take a look at the property with the inspector and I so that they can get a better idea of what they'd be getting themselves into if I were to close. So we're all looking through the property, and the inspector found some goodies, including a gigantic mold problem because the roof was completely shot. So we're already looking at a roof job, which is very expensive, but I did plan on $15,000 worth of renovations, and a roof would probably eat most of that up in a property of this size. So I thought, okay, well, that's just one thing. What about everything else? Well, as you're walking around the property, the floor joists are creaking everywhere, so you're probably going to need to do completely new floors, or at least fix all these floor joists, which would have been very expensive because you're ripping it out either way. And to make matters worse, there wasn't actually a basement in this property. It was a crawl space that was practically inaccessible because there was a gas line in front of the entrance of the crawl space, so you're already going to have to move that, which would have been expensive, unnecessarily expensive, just to get into the crawl space, which I don't even know if a real person could have fit into. You could take a look at the picture here. Look how small that crawl space is. I was standing next to it. I'm not that large of a guy, and I was getting claustrophobic just looking at it, trying to imagine squeezing my shoulders through that. I don't know how on earth you're supposed to get under the property to actually take a look at these joists. You'd have to rip everything out from above and then jump in, and I don't know. It just would have been a project in itself, and that's before we consider the roof and other issues. Speaking of other issues, the sewer line appeared to be completely backed up, so we could hardly test the water in a lot of places, and this is probably because the property's from 1925, and any galvanized plumbing was probably either compromised by tree roots and was being lifted up in that way, so to where gravity couldn't do its work to take any liquid away from the property, so it's probably getting trapped somewhere, or there was tree roots actually inside of the pipe, depending how badly decayed it was. Wasn't really sure. Now, this was a surprise to me, that all these problems that were very bad. The roof, I could understand. You can live in a property with a bad roof, not for very long because you're going to get bad leaks, but it appeared that most of the leaks actually went inside of the plaster walls. And it's plaster walls, by the way. It's an old property, so you're not going to get drywall in a lot of these places. People will just plaster on to existing cracks, which is what this property owner had been doing, which again the listing did not show or suggest. But what was weird was this property was actually listed for rent before I actually came in to make an offer, and other people had made an offer. So it was being sold as though it was practically rent ready, and it said it had a water heater and an oven range in both units. And in one unit, there was no range and no fridge, even though they were listed on the listing. In another unit, the water heater was missing. Maybe it was stolen. I don't know. It was already beginning to get very expensive if I was going to be covering all of this. So we had some problems to sort out. So I threw a Hail Mary and asked for a gigantic credit, which I fully expected not to get, since this seller frankly, clearly did not really care about the state of his property, or if he did, he had no idea what was going on, and that's bad enough in my opinion. So he decided that it was worth it to try and go for another buyer, which probably is the best idea in the hot market that is Indianapolis. You could probably find a less stingy buyer than myself, and could easily sell this for much more than what the net of me asking for about a $30,000 credit on an $85,000 deal would have been. Because the thing is, a new roof and new floor joists, those don't really positively affect your ROI. It's a total expense. When you add a new roof to a property, you're lucky to get a fraction of your money actually back in property value, and you're definitely not going to get a rent bump. A tenant doesn't care about a new roof. No one really cares about that until the roof actually goes out, which it was in this case. So you're going to be dumping $10,000 into a roof and not seeing any positive ROI on your rent, which makes it very expensive. So I would want the seller to cover that, since I didn't expect to be actually taking care of a roof when I made the initial offer. Same goes for the floor joists and the missing appliances that said were going to be included, and the missing water heater, not to mention the backed up sewer line and some other more minor problems. So that deal's gone. We're going to be looking for other deals, as we have been for the last 6 months now. It's been a long search. Granted, 3 months of it have been in the pandemic era, which have made things very odd for financing. I would have had access to a few more deals that were actually really good on paper, that much better than this property actually, and I was feeling very good about, but financing was just simply not available, and I didn't have the cash lined up at that point. So we're back to square one, like we have been for the last few months. Thankfully, financing appears to be opening back up, so hopefully we'll have some more opportunities in the near future to actually make purchases. I might end up going for a smaller home, like a single family, a smaller sub $100,000 property, so I could just have a property under my belt, a true rental, not the condo that I currently live in house hack. So I do own rental property in that sense, but it's really my home that I happen to rent out a portion of. But once I actually have a true rental property under my belt, I think financing will be much easier to get, since I'll be a veteran landlord and I'll actually have some true experience in managing a standalone rental property. And I do want to keep some of my cash even after I buy my next property. Unless it's a screaming deal, then obviously I'll dump as much cash as it takes as long as the deal makes sense. I would like to keep some cash on the sidelines anyways, because I can't see there not being some sort of real estate dip in the next year, because we have all this mortgage forbearance, all of this debt that's going to come due, and all of these problems, eviction freezes coming undone. There's got to be some downward pressure on rents and real estate prices in the coming year, I would think, unless, of course, the government adopts yet another gigantic stimulus program that just extends this and pushes it further down the road, which could easily happen. So, anyways, what about my net worth? What has happened to it in the last month? Well, let's get into that now. To recap, about 30 days ago, we were at $71,144.81 in net worth. So let's see what we have in store for this month. As always, let's start with the good stuff, the assets. We currently still have a very large and ever-increasing pile of cash. I actually moved some money out of bonds, and we also got a little more cash from Emily Ann's newest student loan installment. Spoiler alert, that will be on liabilities as well. But we are up to $119,000 in cash, and I'm moving a lot of it into our LLC business banking account, which will be what will purchase any potential real estate deals through. I could always pull cash out of that, of course, but then it would be like a capital contribution, so I just have to be careful for tax purposes. But that's beside the point. We still have a lot of cash. Nothing else has really changed much. Our investment accounts are still doing pretty well since the market is still on this Fed-induced high, this bubble that we have going. There's not much of another way to put it. So we still have a lot of money in there. I have a good number of put options as well in my Robinhood account. And otherwise, nothing else has really changed on the asset front, which leaves us with a total of $372,436.68 in assets. And now on to the liabilities. And really the only real change here is we got a nice bump in student loans. Once again, we're into the next quarter in Emily Ann's program, and she had her next tuition bill come up, so we took out some more loans for that. And that's going to be the case for the next 2 years or so. The payments should get lower as we get through the degree, or I shouldn't say the payments, but the actual loan additions should get a little bit smaller as we finish these last 2 years of the program. So I say we, but it's Emily Ann going through the program. I'm just here for moral support as I go through my own program in law school, which thankfully I can do tuition free. Check out my video on that and how I got a full ride to law school. If you are at all interested in trying to pursue a legal career, I highly recommend checking out my path since it's worked out well for me so far. But anyways, we are going to have to deal with these student loans eventually, but not yet. And there could be, I think, a ton of opportunities in the near future. So I'd rather hold on to a bunch of cash, even though we could pay off a lot of these student loans. Right now, I'd rather wait a second, since we don't actually have to start paying these back for about 2 more years. And I'd rather sit on the cash for now and see if there's some opportunities that present themselves in the near term, which leaves us with a total of $312,391.80 in liabilities, which means that our net worth has decreased to a total of $60,044.88, which is a rather disheartening $11,099.93 decrease compared to last month. And our debt ratio has increased back up to 83.88% as we sit on this large amount of debt, but also large amount of cash as we wait for an opportunity to present itself, hopefully in the near term. So what's next? Well, as I alluded to in the first half of this video, I am still hunting for a real estate deal, and I will keep hunting until I get one. I guess I technically will be hunting probably for the rest of my life, for that matter. It's just, it'll be at different price ranges depending on how much money I have, and I'll always be trying to find ways to create passive income and wealth through real estate, since it's a great tool to do that. Unless, of course, the industry changes dramatically for some gigantic legal change or something like that, which could happen, but you never know. I'm just going to assume it's not going to happen, so I'm picturing myself looking for deals for the foreseeable future, even after I buy my first one, which hopefully will be sooner rather than later. I just have to keep being patient to make sure I actually get a good deal and don't get into something bad just because I am itching to do a deal. Because believe me, I am itching to do a deal. I've been itching to do a deal for almost a year now. And now that I feel like I'm actually equipped to do it, it's just getting very frustrating as another deal bites the dust and I just have to wait. But I guess this is good training for when we have another near recession market, which will probably be a few times in my lifetime. So it'll be good practice for that, and just being able to stay disciplined, focused on my goals, and to make sure that I stay patient, even though I am very excited to actually do a deal. I can't get too excited to where I'm actually hurting my own return and hurting myself for the long run. Then again, getting half of a decent deal is still better than no deal, so man, this is tough. Anyways, that's all I've got for today. If you like this video, be sure to like it since it helps the channel out a lot. If you like this sort of content, and more specifically this series, be sure to subscribe so you don't miss any new updates. Again, I post a new episode of this series on my road to $1 million in net worth every single month on the first of the month. If you're more into stock investing, I actually have a monthly series on building an M1 finance portfolio, which has a variety of different stock strategies and commodities in there as well, like gold. I also do that every single month on the 15th of the month. So every 2 weeks, I'll have one of these monthly series going. So if you like that sort of thing, definitely check that out. I'll include a link to my most recent episode right here, so you can take a look at that now if you're more into the stock investing side of things, or you're just curious to see what that series is like. And what are you guys doing during this strange sort of, we'll call it the calm before the storm, maybe? If there is a storm coming, it might just be a ruse, or the storm will pass without actually raining on us. So what are you guys doing through this time? Are you staying conservative, staying high in cash, or are you all in right now? Since there are investors doing all of those things. So I'd love to get your perspective on things, what your strategy is, and what your thinking and reasoning is behind your decisions. But until next time, take care.